What coin should I buy? There's probably no worse question you can ask in the cryptocurrency space. If someone gives you an answer, it's probably riddled with bias. If someone doesn't give you an answer or says, I don't know, you're left unsatisfied. The best answer you can possibly get, even though you may not like it, is do your own research. I've shared a link in the description to a really good video by the Whiteboard Crypto channel on what doing your own research really entails, and you'll walk away with an appreciation for how hard it is. But let me give you 5 recommendations that will probably not fill you with adrenaline, but give you more sustainability in this space. Of course, none of this is investing advice, just principles and practices that give me some peace of mind. Number 1, don't bet the farm. This applies at 2 levels: what allocation to cryptocurrencies in general, and which ones within that space. Going all in on anything, I find, increases the adrenaline. Sure, it may be fun, but it also increases the chance of wipeout and the chance of you making a judgment error. You'll likely find, amidst a crisis or a bear market, that your real risk appetite is much lower than you thought it was. Oh wow, I didn't think it would actually collapse, is something that you may hear in one of those 60% over 2 weeks kind of drawdowns. This market is a lot more volatile than even equities. Upon seeing one of those 60% declines in a span of 2 weeks, or seeing multi-month grind ever downwards, your disillusionment may drive you to sell at close to the worst time. I would say, invest the amount that you can really be okay losing. That mindset will allow you to stay in the game for longer and ride out these bear markets. Number 2, explain your thesis. Preferably write it down. Even more preferably, share it with others, maybe even publicly, and seek scrutiny. Doing this will help you in 3 ways. Number 1, it forces you to clarify your thinking. Number 2, it makes your thesis better informed as others point out what you may have missed. And number 3, it gives you an original answer or a stake in the ground you can come back to periodically to assess what you were right about and what you were wrong about, which will help you ultimately become a better investor and also a more humble one. The 2 go hand in hand. Principle number 3, automate. Once you have a strong long-term thesis, perhaps it's a good idea to buy in over time. Don't try to time the market. Remember that most analysts online who recommend whether to buy or sell a specific coin at a specific time are very often wrong, have a different agenda and life situation than you, and are good at touting their past good calls but draw no attention to their bad calls. Unfortunately, many of them promote what they hold. I think generally you're better off ignoring them. Plus, if your long-term thesis is quite bullish, it doesn't matter whether you exactly catch the bottom tick. It may not even be worth the risk that you're buying in high. So be humble, admit that you don't know whether now is the right time to buy it or not, and just automate. And what's an example of how you automate? Say you're a Coinbase Pro user and want to regularly average into Bitcoin, monthly, weekly, perhaps even daily. You can use an online service called dcabot.online to set that up. I've included a link to this as well in the description. But I know that many other brokerage houses, they offer automated investments into different cryptocurrencies. Principle number 4, follow the project, not just the price. By all means, get in on those online communities focused on a project. For example, try to figure out whether the protocol development is following the roadmap. See how the ecosystem is growing. For example, how many apps are being built on that specific protocol. That's the fun stuff. You'll learn a lot, meet some interesting people, and know what to look for in that project or other projects. In short, you'll become a better investor the more you follow and are involved in the projects you invest in. At best, maybe only 5% of total investors put in that kind of effort. And I think those that do end up developing a circle of competence better than those who just follow the price. In fact, minimize how often you look at the price. Your emotions can get the better of you and tempt you into doing something one way or the other. And number 5, learn about investing psychology. I think 2 must-reads in this genre are The Psychology of Money by Morgan Housel and The Psychology of Human Misjudgment by Charlie Munger. I've included links to both of them below. The Acquirer's Multiple blog has a list of 20 great books in the investing psychology genre. Do check it out. I've included a link to that as well. Okay, so just to recap, how to have a better temperament as a crypto investor. Number 1, don't bet the farm. Number 2, explain your thesis. 3, automate where possible. 4, follow the project, not just the price. And 5, learn about investing psychology. What did I miss? What are some of your principles? Let me know in the comments to this video. And if you like this content, do like the video and subscribe to the channel. Thank you so much.